Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to be going through our live mortgage rates, and then we are going to do a deep dive into short-term rental property loans. So great topic here for today to go over. Give us just one moment here to go live on all the different platforms. We do appreciate everybody tuning in nice and early. We got the chat up on the screen there. Feel free to drop a comment there in the chat as you tune in. Happy Monday, everyone. Excited to see what the rates look like today. And it looks like we are live on all the platforms, so we'll go ahead and get started. We'll take the chat off the screen for now, but go ahead and keep dropping your comments in there. Drop any questions you have in the chat as well, and we can get to them after we go through the presentation here. All right, so welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our chief sales officer, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday on this show at 11 a.m. Eastern is go through our actual live mortgage rates, and then we do a deep dive into a different loan type. Today, we're going to be talking about short-term rental properties, so something we're very familiar with here at the Mortgage Calculator and have all kinds of great programs to help with that Jose will go through. But first, we'll do what we do every morning, which is pull up our live rates. So Nick, if you're ready, let's go ahead and check out our rates for some different programs here and see what they're looking like this morning.
All right. And as has been the case for the last little bit, we have had good news and the rates moving down, which we love. So we'll check out the initial rates for today. It is August 26th, just after 11 a.m. Eastern. So all our initial rates are live for today. Hopefully we see some more movement as we go throughout the day. And we'll compare the APR across the program. If you'd like a full breakdown and itemized loan estimate that breaks down all the fees that go into the APR, please get with one of our team members. We have over 300 loan officers that are happy to help you out. For our demo, as we do every day, we'll set up a basic scenario to compare across the program. Standard single family home. We'll set up a $500,000 purchase, $400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. And we'll set everything to an estimated 760 credit score and an estimated 40% debt to income ratio. So with those settings, let's pull up the pricing for today. So again, we love when the rates go down, and we should continue to see that as the Fed has worked in our favor. First up, our 30-year fixed conventional primary option, the most standard option here. Rates come in today, 5.875, finally well below 6. That's amazing. Final APR, 6.195. Now, if for any reason our customer doesn't qualify for a conventional option, typically the option we want to present for an alternative is FHA, which allows more leniency on credit issues and a higher overall debt to income ratio, but does require upfront and yearly mortgage insurance. FHA is coming in today at 5.125 rate. Final APR 6.040. So if our customer qualifies for both, they may consider FHA if they're willing to do the mortgage insurance. And our customers that need to use FHA, definitely a good option. And we should continue to see this move down in the next couple months. And our VA options, those are only for eligible vets and active service members. If you are eligible, these programs are amazing. Rates today for VA coming in at 5.25. Final APR 5.519 with a standard funding fee there. And if you compare across, notice the VA is going to be the best option for our eligible borrowers. So definitely take advantage. And the final standard option here is USDA. That is only for the USDA eligible areas of the country. That's the rural areas. If the property is eligible and the borrower is eligible, these are great options to consider. Rates as low as 5.125. Final APR with all the fees included, 5.867. So notice if our customers shopping in this area, they're probably going to be comparing an FHA option, which the USDA is a little cheaper than. Also a conventional option, USDA is going to beat out. So great option for those properties that are eligible. And that rounds out the standard options that any bank or lender has. But if our customer doesn't qualify, many banks or lenders will have to deny them. That's where we love to start presenting our 5,000 plus additional options. First up, our 30-year fixed, non-QM, alt doc option. So if the customer doesn't qualify using standard 2 years of tax returns, needs to use different types of documents, we switch to this option. We can use bank statements, 1099s, P&Ls, all kinds of different variations. This option here at 6.5 rate, most likely a bank statement option. Final APR 6.810. Notice we're within just about a half a point, about 0.6 of conventional there to switch to alt docs. So great option for our borrowers that need to use it. Very reasonable compared. And we have our investment options. So first up, tons of flexibility with our non-QM options. So alt doc, bank statement, and similar coming in today 6.875, final APR 7.300. And we'll compare that to our other options for investments. So no government options, no VA, USDA, or FHA, but we have our conventional coming in today 6.75, final APR 7.095, beating alt doc, which is awesome. And that's more normal, which is what we're used to. But definitely recommend our customers check out our other options, which can beat conventional, which is our DSCR, our favorite programs. DSCR stands for debt service coverage ratio. No income needed, no employment docs needed. We simply use the estimated rents to determine a DSCR ratio. The estimated rents can cover the estimated expenses. That's a ratio of 1 or higher, aka the property cash flows. For these demos, we used a ratio of 1.5 so we can see all the programs. So first up, the 3-year prepayment penalty, which is standard, comes in today at 6.625 rate. Final APR 6.939, just a touch below conventional to use DSCR, absolutely amazing. And we can sweeten the deal a little with our 5-year prepayment penalty. Rates coming in today 6.5, final APR 6.798. And we do have an option for no prepayment penalty for DSCR loans. This is common for states that don't allow it, and some investors don't want it. Rates as low as 6.999, final APR 7.429. So notice it's a touch higher than conventional if you want no prepayment penalty. Most investors still prefer a DSCR loan, even though it is a little bit higher cost there. And the final 2 options here, we did an episode last week on these, are 30-year fixed second mortgage options. So many customers have a low rate first mortgage, but still need to access cash out, access their equity. These options allow us to not have to use a HELOC, which has some drawbacks and higher rates. We can do a fixed second mortgage for primary home, rates as low as 8.5, final APR 8.944 to get cash out of a primary home. And these are non-QM programs, so we can use bank statements and similar. And same option for investment properties. HELOCs are rare for investment properties altogether. So these are great options. Rates as low as 9.75, final APR 10.026 to get cash out up to 80 LTV for an investment property. And now we'll go ahead and switch to our topic for today. One of my very favorite topics are short-term rental property loans. So these are Airbnb or similar, right? These are not condotels, which we've done some episodes on, right? That's the old style of short-term rental property. We're talking about the new style here, an Airbnb type. So lots of different ways to do this. We have thousands of different programs in order to optimize this for our investors out there. So Jose will highlight a few of the options that we have that do allow us to use these short-term rental properties. So Jose, if you're ready, let's check it out.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Definitely one of my favorite episodes when we're going over the short-term rental properties, because there are just so many solutions available at the Mortgage Calculator toolbox, as I like to call it. The first option here, well, let me go ahead and share my options with you today. Very important to note that with the DSCR guidelines, we do have very many options. We just have to review all the different guidelines that we have, right? We have over 5,000 different product combinations possible, and the DSCR option is one that really has the most options because there are just so many different guidelines possible. As I always like to mention, non-QM guidelines are usually specific to the investor where the loan is being sold to, so these are all different options. First one here, which we love using, is the 15% down DSCR option. Now, this one only allows using long-term rents, but there are no restrictions in it, as you may find with full doc type loans. So due to the extra flexibility, we're just able to use the long-term rents here, as long as the long-term rental amount covers the minimum debt service coverage ratio requirement. If that is the case, which is what we would always first do, see what the long-term rent is for that area. And if it works, let's just go with the option, easiest option, I guess, in this case. And we're looking at 8.249 is our lowest cost option at a cost of 0. It is par. And 6.874 is our lowest cost option for 15% down. This is also our lowest down payment option. Also a very common attribute here. So our 15% down option when the property's long-term rents qualify the borrower. Now, should the long-term rents not work, then we do have amazing options using AirDNA and other tips and tricks. So using AirDNA, minimum down payment is 20%. However, look at those rates. We're looking at 7% as our lowest cost option, with actually a lender credit of 0.025 points. And you can buy that down all the way to 6.375 at a cost of 2.475 points. For our DSCR purchase option with 20% down using AirDNA. And as those of you may not be aware, AirDNA is a database that compiles short-term rental property comparables. So do be aware that the comparables, like any other comparables, have to be similar in gross living area, close proximity to the property, and preferably the same design and style. In other words, newer style property, you're going to compare with hopefully newer style properties, and you're going to compare a 60-year-old property with a property just built. Nor are you going to compare a 10-bedroom property with a 4-bedroom property and think that all you have to do is adjust for the bedrooms count and size. That would not be possible. Our next option, if AirDNA comps are not available, you could use short-term rental revenue reports. Now, for a purchase, this is only going to be possible where the seller is already operating the property as a short-term rental and is able to provide the last 12 months of short-term revenue reports from portals such as Airbnb, HomeAway, VRBO, Booking.com. Those are just some of the more popular ones. 6.99 is our lowest cost option at par, and you can buy that down all the way to 6.5% at a cost of 1.85 points for DSCR purchase option using short-term rental revenue reports. Now, if short-term rental revenue reports are not available because the property was not operated as a short-term rental, if AirDNA comps are not possible, maybe there weren't any suitable comps or just none at all, or if the long-term rent does not qualify the property either at 15 or 20% down, then an option is qualifying the borrower with a low ratio DSCR option. This is where the acceptable debt service coverage ratio would be 0.75 to 0.99. And if that is the case, 25% down will allow the borrower to qualify with less than 1.0 DSCR. So 7.875 lowest cost option at par. Buy that down to 6.375. Pretty amazing there at a cost of 3.475. And now we have our last purchase example before I share with you our refi example. Last purchase example is with the no ratio DSCR option. This is where the property cash flows at less than 0.75 debt service coverage ratio. This does require 25% down payment, so max LTV for this option is 75%. However, this will allow the financing of a property that is actually not even cash flowing at 75% of the monthly housing expense. And we are looking at our lowest cost option is 8.749 at par. And you can buy that down all the way to 7.249 at a cost of 3.225 points. And our last example is cash out refi, 75% LTV for your DSCR property using AirDNA. Yes, we actually do have an AirDNA cash out refi option. Almost every example out there has AirDNA for purchases only. However, here at the Mortgage Calculator, we have this option for cash out refis, full LTV, 75%. The only catch here is that it does have to be for properties recently put into service as a short-term rental. That means that a property that was either recently purchased or may have just undergone an extensive renovation, preparing it to be put to work as a short-term rental and furnishing it and all that stuff. And if the borrower can provide documentation showing that it was just put into service, then you are able to use AirDNA, which is an amazing option. 7.374 with a lender credit of 0.025 points, and you can buy that down all the way to 6.499 at a cost of 2.975 points. Of course, all the other regular DSCR cash out refi options are also available. Just wanted to highlight this one for you, which is the cash out option, max LTV using AirDNA. So look towards the Mortgage Calculator for all your short-term rental property needs.
All right, I don't see any questions here. Give it one more second. All right, I guess we can wrap it up. So we do the show every weekday at 11 a.m. Eastern, so check us out tomorrow.